Welcome to our guide on building a cash flow positive residential property portfolio in South Africa. In this short video, we'll explore key strategies and insights to help you navigate the South African real estate market and create a profitable portfolio that generates consistent cash flow. Before we dive into the specifics, let's understand the fundamentals of building a successful property portfolio. Firstly, it's essential to conduct thorough research on the local market trends, demand, and rental yields in different areas of South Africa. Conducting thorough market research involves analyzing factors such as population growth, employment rates, and infrastructure development in various neighborhoods. For example, areas experiencing rapid urbanization or infrastructure upgrades may present attractive investment opportunities. High-demand areas are typically characterized by amenities such as schools, shopping centers, and public transportation hubs. For instance, neighborhoods near universities tend to have a consistent demand for rental properties from students and faculty members. Rental yield is a key metric used to assess the profitability of an investment property. It's calculated by dividing the annual rental income by the property's value. For instance, a property with an annual rental income of 120,000 Rand and a value of 1 million Rand would have a rental yield of 12%. Now let's talk strategy. Firstly, identify neighborhoods with high rental demand and potential for appreciation. Look for areas with good infrastructure, amenities, and proximity to schools, transportation, and employment hubs. Once you've identified target areas, it's time to consider your investment strategy. Are you looking for long-term capital appreciation, immediate rental income, or a combination of both? Long-term investors may prioritize properties in high-growth areas with the potential for significant appreciation over time. On the other hand, investors seeking immediate cash flow may prioritize properties with high rental yields, even if they have lower potential for appreciation. Some investors opt for buy-to-let properties, while others prefer to flip properties for quick profits. Buy-to-let involves purchasing properties with the intention of renting them out to generate rental income. Property flipping, on the other hand, involves purchasing properties below market value, renovating them, and selling them for a profit. Others may prefer the BRRR strategy. The BRRR method is a popular strategy among real estate investors that involves buying a property, rehabbing it, renting it out, and then refinancing to pull out your original investment plus any additional equity that has been built up and finally restart. This strategy allows you to grow your portfolio in a reasonably stable and fast way. Each strategy has its own advantages and risks, and investors should choose based on their financial goals and risk tolerance. Now, let's talk financing. While South Africa offers various financing options, including mortgages and property investment loans, it's crucial to have a solid financial plan in place. Financing options for property investment in South Africa include traditional mortgages, property investment loans, private financing, seller finance, angel funding, venture capital, and many more. Each option has its own eligibility criteria, interest rates, and repayment terms. Lenders typically assess borrowers' borrowing capacity based on factors such as income, credit history, and existing debt obligations. Investors should assess their borrowing capacity before applying for financing to ensure they can afford the repayments. Don't forget that there are upfront costs which influence the initial capital outlay and ultimate rental yield. Upfront costs include the deposit, transfer fees, attorney fees, and any renovation expenses. It's important for investors to accurately calculate these costs to determine their total investment outlay. So what about renovations and maintenance? Renovation and maintenance play a significant role in maximizing rental income and property value. One should invest in renovations that enhance the property's appeal and functionality while keeping costs within budget. This can increase its rental income potential and market value. For example, upgrading kitchens and bathrooms, installing energy-efficient appliances, and improving curb appeal can attract higher-quality tenants and command higher rents. Renovation costs should be carefully managed to ensure they align with the property's rental income potential and expected appreciation. Investors should obtain multiple quotes from contractors. Prioritize renovations with the highest return on investment, and avoid overcapitalizing on improvements. Regular maintenance is essential for preserving the property's condition and minimizing repair costs. Investors should conduct routine inspections, address maintenance issues promptly, and budget for ongoing maintenance expenses to ensure the property remains attractive to tenants and retains its value. Now, let's talk about tenant management. Finding reliable tenants and maintaining positive landlord-tenant relationships are crucial for a successful property portfolio. Screen potential tenants rigorously, conduct background checks, and draft comprehensive lease agreements to protect your interests. Regular property inspections and prompt maintenance responses are also essential for tenant satisfaction. The tenant screening process involves evaluating prospective tenants' rental history, creditworthiness, employment stability, and references. Investors should conduct thorough background checks to identify reliable tenants who are likely to pay rent on time and take care of the property. Lease agreements should clearly outline the rights and responsibilities of both landlords and tenants, including rent payment terms, maintenance responsibilities, and dispute resolution procedures. Investors should work with legal professionals to draft comprehensive lease agreements that protect their interests and comply with South African rental laws. Regular property inspections allow landlords to identify maintenance issues early, ensure compliance with lease terms, and address any concerns raised by tenants. Investors should schedule periodic inspections and maintain open communication with tenants to foster positive landlord-tenant relationships. As your portfolio grows, consider leveraging technology to streamline property management tasks, such as rent collection, maintenance requests, and communication with tenants. Now let's discuss the importance of diversification and risk management. While residential property investment can offer lucrative returns, it's essential to diversify your portfolio across different property types and locations to mitigate risks. For example, investing in a mix of residential, commercial, and industrial properties can provide stability and diversification against market fluctuations. Investors should stay informed about market trends, regulatory changes, and economic indicators that may impact property values and rental demand. By monitoring market trends regularly, investors can identify emerging opportunities and adjust their investment strategy accordingly. Finally, risks associated with property investment include economic downturns, tenant defaults, and unforeseen maintenance expenses. Investors can mitigate these risks by maintaining adequate cash reserves, obtaining insurance coverage, and conducting thorough due diligence before making investment decisions. In conclusion, building a cash flow positive residential property portfolio in South Africa requires careful planning, research, and execution. By following key strategies such as market research, investment diversification, and effective property management, investors can create a sustainable source of positive cash flow and achieve their financial goals. Successful property investment requires discipline, patience, and adaptability to navigate changing market conditions and unexpected challenges. By staying disciplined in their investment approach and adapting to evolving market trends, investors can maximize their chances of success and build a profitable property portfolio over time. Thank you for being part of the EDPF Academy #1 Million Title Deeds project. We hope you will continue your journey to property ownership with us by registering for our Academy course at www.edpfacademy.com or visit our main site at www.edpf.co.ca for more information about EDPF.